All right, listen up, folks. We're talking about a revolution happening right now inside those giant warehouses. For years, these places have been a mess. You want your stuff yesterday. You click a button and expect a box on your doorstep in hours. This is where the magic of automation comes in. Instead of slow, manual labor, you have a symphony of robots that don't get tired and don't make mistakes. This is the new reality for supply chains. Enter Symbotic, ticker symbol SIM. This company is leading the charge, building the brains and the muscle for the warehouses of tomorrow. And that, my friends, is a story you need to pay attention to, because the game is changing faster than ever. Symbotic is positioned right in the sweet spot of this massive technological shift. And when you solve a giant problem for giant companies, you're looking at a giant opportunity. So, what exactly does Symbotic do? Let's break it down. Forget everything you think you know about a warehouse. Symbotic redesigns the space and builds a dense, multi-level structure. Inside, a fleet of fully autonomous robots zoom around at incredible speeds. They retrieve any case of goods and deliver it to a workstation. The secret is the artificial intelligence that orchestrates this entire ballet of bots. It allows companies to store more products in less space while dramatically increasing speed and accuracy. It saves them a ton of money and makes them better at what they do. In a world where speed is everything, having a Symbotic system is like having a superpower. They can transform cost centers into strategic assets and serve their customers better. Let's dive into the Symbotic system. It's an end-to-end solution, starting with a high-density steel frame that maximizes storage space by eliminating traditional aisles. The bots are state-of-the-art, lightweight, agile, and fast. Each bot autonomously navigates the structure, picks up goods, and transports them. The AI-powered software manages inventory in real time, assigns tasks, and learns to optimize product placement. At the outbound station, robots deliver cases to robotic arms. These arms build organized, store-ready pallets, optimizing unloading at retail locations. It's a complete integrated system, storage to shipment. Let's talk money. The growth story at Symbotic has been spectacular, with explosive revenue growth. They are deploying their systems in more and more warehouses. Each new deployment is a multi-million-dollar project. Symbotic's relationship with Walmart is the crown jewel. They are a major partner and shareholder. They have committed to deploying Symbotic's technology across their regional distribution centers. This is a multi-billion-dollar vote of confidence from the world's largest retailer. C&S Wholesale Grocers is another key partner. Finally, we have to talk about the path to profitability. The company is on a clear trajectory to hit positive earnings and free cash flow. Let's pump the brakes. No stock is a one-way ticket to the moon. Do your homework, and that means looking at the risks. The biggest risk for Symbotic is customer concentration. A massive chunk of their revenue comes from Walmart. This partnership is a huge strength, but also a significant risk. What if something happens to that relationship? Next is execution risk. Symbotic's work is incredibly complex. Any delays or technical glitches can hurt their reputation. This stock isn't cheap. Any small disappointment can cause a major sell-off. If we hit a recession, companies might pull back on big capital spending projects. Don't get complacent. Symbotic isn't alone. The warehouse automation space is hot with competition from established European players like AutoStore and Ocado, which has a major partnership with Kroger. Then there are the diversified industrial and logistics giants like Honeywell and Kion Group. Don't forget new entrants or customers developing in-house solutions, like Amazon's acquisition of Kiva Systems. Symbotic's key differentiator is their systems architecture: dense storage and high-speed bots. They claim it's faster, more flexible, and space-efficient. They need to keep innovating and proving their solution is the best. So, is Symbotic a stock you should own? On one hand, it's at the center of automation. They have a best-in-class technology platform and phenomenal growth. They have a locked-in backlog of revenue from partners like Walmart. On the other hand, there are risks. Reliance on a single customer is a major concern. The stock's valuation is sky high. Expect a lot of volatility. This is a high-risk, high-reward proposition. If you are a speculative investor with a long-term time horizon, then Symbotic could be a powerful addition to your portfolio. The potential upside is enormous, but if you're a conservative investor, this is not the stock for you. Symbotic is a fascinating company with a tremendous opportunity. Do your homework.